Hi, my name's Alan Carter. I'm the President and CEO of Cabral Gold. We have an advanced gold project in Brazil. It's an exploration and development project. We're currently working on a pre-feasibility study on the oxide material that we have on the project. We have 1.2 million ounces in indicated and inferred category and a lot of exploration targets. And the project's immediately adjacent to G Mining's TZ project, which will be Brazil's third largest gold mine.
Alan, good to have you on. Today, if you don't mind, I want to try and understand the strategy now. Obviously, it's been difficult 2 years in the marketplace for most people, and I think your recent announcement suggests that you're going to get focused on near-term revenue. So, going after oxides, you've raised some money recently. Can you clearly articulate the new plan for me today, please?
The plan, Matt, is to get this oxide material, which is the weathered material, the weathered portion of our gold deposits in Brazil, into production as fast as possible.
Okay. Meaning what? So you've announced this kind of pre-feasibility study commencement. So you talk me through the next few months of what you're going to be doing and what it's going to tell you.
Yeah, we've hired a Senco in Brazil, which is a big engineering firm, to complete a pre-feasibility study on the mining and processing of this oxide material. We know it's amenable to heap leach. We anticipate that study will take us about 6 months. So sometime in the fourth quarter, hopefully around October, we'll have the results of that pre-feasibility study. And that will be initially a small trial mining operation, mining and leaching this material. That we will use that study and that report, which will be 43-101 compliant, so it will be a public document. We'll use that to make a production decision. Our estimates are that we could build this thing, get into initial production within 8 months of that decision. So hopefully we'll be in production mid next year.
Okay, and so why don't you need to do a feasibility study or more advanced studies?
Well, look, it's a relatively modest trial mining operation to start with. The operation is currently licensed for 300,000 tons of ore. Initially, obviously, we're going to be mining the higher grade of this oxide material. We're doing it will be a very good pre-feasibility study, but obviously it's quite different to looking for bank financing for a $500 million mine. That's step 3 for us, or step 2, and that is mining the underlying hard rock deposit. But initially, this is a small, modest trial mining sort of operation.
Right. Okay. And give me a sense of the scale of this, because obviously heap leach is a relatively simple process. It typically is relatively low CapEx. Can you remind me in terms of the saprolitic material that you're going after? Vaguely, have you any sense of how many what the grade is, or how many ounces there are? So I'm trying to work out. Can I do some math on this?
The overall global resource right now, and this is on the oxide material and the underlying hard rock material, is just under 1.2 million ounces. So the oxide material on the top has basically weathered over millions of years. It's saprolite. And if your listeners don't know what saprolite is, it's basically red mud. And we've got about 60 meters of this red mud, which has gold in it. Now, this mud is all sitting on hilltops above the hard rock material. And because it's sitting on hilltops, the strip ratio will be very, very low, close to 0, we anticipate, because it's on topographic highs, hilltops. It won't require any drilling or blasting because it's mud. So Mother Nature has basically sort of weathered this material and done what you would normally do in a big processing plant. So the mining of this is basically very, very simple. It's scooping it up with excavators and sticking it on trucks. What happens to that material then? Instead of having it, normally it would go through a big grinding and crushing circuit, with these big rotating mills that you see in all the videos of big mines all over the place. We don't need any of that. What we will do, we'll add a little bit of cement to it to form pellets. It will go up the conveyor, and then it will form heaps, and then it will be leached in heaps in situ. So it's a very sort of simple sort of operation. Now, we haven't released any guidance, and I can't give you any specific guidance in terms of numbers, but I can tell you that we do have 230,000 ounces of this oxide material right now in 3 different, what I call blankets, which is this weathered material that sits over the hard rock, the much bigger hard rock gold deposits. We think there's excellent potential to expand that. That material currently is averaging about 0.5 gram, but within that, there's a lot of higher grade material, which is in the order of 1.5 to 2 grams. So we will mine that first, Matt. So as I said, we're currently permitted for 300,000 tons of ore a year. So I think that gives you some sort of idea for the first few years about what we anticipate producing. There is a lot more of this material that we haven't fully drilled off yet that's not included in the current resource base. So I think there's really, we're very optimistic that we'll significantly expand that initial 250,000 ounces of this oxide material. So it's very low-hanging fruit.
Again, just to help me get with the math. So do you currently know where the 1.5 to 2 gram stuff is, and have you got a sense of the size of that?
Yes, we do. It's right at surface or near surface. It could be exploited very, very quickly. We haven't broken down that high-grade material. I have a pretty good sense of it, but we'll certainly have enough of that material for several years, initial operations. Now, obviously, the grade will drop if we don't find any more of this high-grade material, and I think we will. In subsequent years, the grade will drop. But the cutoff on this oxide material, because it's so cheap to mine it and process it, Matt, the cutoff in the resource estimate that the engineers used, that SLR used in the latest resource estimate, was 0.13 grams a ton. That means that everything above 0.13 grams a ton in this oxide material is potentially economic. That's their number, not ours. Now, obviously, we're targeting stuff which is much, much higher grade than that initially, but there's a lot of this material and we can get at very quick, and it'll be very cheap to mine and process.
Okay, so that's the cutoff. So talk to me about recovery rates then. So was there a PEA with this, or have you just gone straight to PFS?
No, we didn't do a PEA. We've done a lot of internal scoping work. We haven't released any of that stuff to the market. It's not obviously 43-101 compliant, but we've hired consultants. We've done a lot of internal work ourselves, modeling the high grade portion of this oxide material, figuring out what the costs are likely to be. Going to mining contractors, getting quotes, so understand what our capital and operating costs are likely to be. That is all getting fed into the pre-feasibility study. So we skipped the PA. We know that internally that we've got a very robust sort of project for the reasons that I've mentioned to you. So it looks very good. What was the second part of your question?
Well, it's just again to help me with my math. What I'm trying to get to is understand all the variables, which will give me a sense of what the AISC could look like, and therefore what you could be making for every ounce. Obviously, gold at $2,000, gold producers will be the beneficiaries of that, and the time frame it suggests, is very encouraging too. But margin, it's always about margin. So is there anything more that you can give me or indicate, whether it be through peers or more broad data at the moment?
Not at this point, Matt. I mean, what I would suggest is that you might want to look at comparable operations, given the sort of parameters that I have mentioned. I can't give you an all-in sustaining cost right now, but I can tell you that our internal work indicates that we've got a very robust trial mining operation here.
Okay, the question that you guys need to answer internally, I guess, is the scale of this. How many ounces a year would you be aiming to produce? Given the ease, like you say, it's a very simple process. Given the ease of that, you got to set a number, and you got to get that kind of arbitrage between the CapEx, which is expensive and almost will define your economic viability, and the number of ounces that you produce and the time frame which you produce that. Have you got a scale of operation that you're leaning towards in terms of ounces per year?
Yeah. It's about 1,000 tons a day average, and so if you took for 2 grams, for example, that would be just over 20,000 ounces a year. Now, at least initially. Now, obviously, the plan would be to expand that pretty quickly. But if you look at the few junior companies, and as you know, there aren't a lot of junior minor explorers that have this sort of opportunity in front of them. There are an awful lot of explorers who continue to raise money through diluting their capital structure, but there aren't a lot of companies like us that have 250,000 ounces of mud with gold in it lying around on surface. But if you look at the few that do, generally the CapEx estimates for something like 1,000 ton a day operation come in from anywhere from sort of $10 to $30 million US CapEx. Now, I can't tell you precisely exactly what our CapEx number will be, I'm hopeful that it would be on the low end of that range. It may be less, it may be more than that range. I don't know yet, but you know, this isn't something that's going to require hundreds of millions of dollars of capex. It's not.
Okay. Well, look, if I may, the end game for you here is obviously the hard rock. That's the much bigger play here. It's a district-wide opportunity. You've always said that, and you know this is not a distraction. It's an enabler. Is that the way you're looking at it?
Absolutely, Matt. It is a massive opportunity. Look, we've got a district-scale project, as you know. We've got dozens, literally dozens of very compelling targets, some of which have got some drill holes in it, and many of which don't. We've now got 4 deposits, 2 of which have resources on them of about 1.2 million ounces. Those 2 deposits have fantastic potential to grow. We've got a very conservative resource estimate that was done by SLR on those 2 deposits. There is a lot of a limited amount of drilling. We feel additional drilling within those 2 deposits would add a significant amount of ounces. The 2 new discoveries, the 2 new deposits that we've made in the last 18 months or so, don't have any resources blocked out yet. Why? Because we haven't got enough drilling on them, but we've got enough drilling to know that there's continuity. We just don't have enough to put resources around them. So with a limited amount of additional drilling here, we feel that we could get the overall global resource, which is mainly the hard rock material, up significantly from the current, 1.2 million ounces or so. So that's a massive opportunity. It is district scale. It's on the same geological structure as G Mining's TZ deposit. As you know, we were directly involved in the discovery of that deposit. That's 2 million ounces. Our project has historically had a footprint 10 times larger than theirs. And that's based on the amount of placer gold that the illegal miners mined from the streams here 40 years ago. Now, virtually all of those guys have gone, but, Cuyu has a much, much bigger footprint than TZ does. So it should have a much, much larger hard rock endowment here. And so what we want to do with this trial mining operation that we're doing the pre-feasibility study on now is get into cash flow as fast as we can and fund the growth of the underlying hard rock resources internally through our own cash flow, rather than relying on the market and relying on the fact that we've got to issue shares. We have no control over the price of shares. We can keep putting out great drill numbers, but if market sentiment is negative, you have to raise capital by diluting your capital structure all the time and raising shares. We want to get off that hamster wheel, and we want to be able to fund our resource internally.
Right. So you want to be a producer, get it. It will help with the cash flow. Will help with sort of non-dilutory decision making. Okay. So here's the question. The immediate question is: there will be short-term pain, presumably, unless you're going to take advantage of what a lot of juniors are talking about, which is alternative financing. How do you fund the capex to get into this cash flow?
Well, yeah, as you know, there are several routes for funding that. We're certainly not going to be doing it through solely through equity financing at these levels, given that the market for junior explorer developers is still very depressed, and most of us, virtually all of us, are trading close to 52-week lows. As you know, there are some signs of a bit of a turnaround. Gold is now sort of seems to have leveled off at plus 2,000 ounces, and a lot of folks are speculating that it could go much, much higher in the near term here. But regardless of whether it does or it doesn't, we are spending a lot of time in parallel with this pre-feasibility study, exploring all the different alternative ways of financing that initial capital that we will need. And we've got a whole bunch of discussions going on right now, so that when we come to the end of the pre-feasibility study, we'll actually have the financing lined up. It won't be a case of, here's a pre-feasibility study, guys, are you interested in financing this? And then waiting 6 months to try and get a deal together. We're working on that now, in parallel.
Okay, so just finish it off here, because like I say, short and punchy. I want to go away and do some math. The 3 main reasons, or 3 things that people need to believe that this is going to be a success. This new strategy is going to make this a success story.
Yeah, we have a near-surface oxide opportunity in front of us. We have a pre-feasibility study that is currently going on that will be used as the basis for a construction decision That should be complete by October, November this year. That will allow us to make a construction decision on producing gold from our oxide material at Cuiú, which will fund all of the future exploration development work that we need to do, particularly on the hard rock resource. So what that means is there'll be very little, if any, dilution with respect to this company going forward. We are in Brazil's biggest new gold district. As I said, there's a massive project, a $500 million project getting built immediately next door to us. Our claims are contiguous with theirs. So this is a very exciting new gold district in Brazil. And we have a project which is historically produced 10 times more gold from the streams, placer gold, than theirs did. It has a much, much bigger footprint, a lot more targets, and currently we have 4 deposits, only 2 of which have a resource on. I'm not sure if that's 3 reasons, Matt, but I mean, I think the other reason to seriously look at Cabral is we've put a lot of our own money into this. So I've currently put in $2.8 million. 1.8 of that is through equity as shares. There's $1 million loan I've loaned the company. So I'm very, very motivated to make this company a success. I suggest to you that's not that common in this business. There are some guys who have really put up a significant amount of their money, but it's not that common. It's certainly something I look for as an investor, but I think it should be something that most people, if not everybody, should pay serious attention to when contemplating investment in a junior company.